Good morning. Yes. So, we talked about Bharat banking in the last year presentation as well. And, we told you that there are 3 or 4 imperatives for us to succeed in Bharat banking. It's a key strategic project for the bank. And 3 or 4 things that we worked on in the last couple of years is to build a multi-product, architecture for delivery in these markets. Also, in these markets, very important that you underwrite the customer very well, so that your risk and credit costs are contained. So we work with customer collectives and building partnerships, etc., to deliver that to that model. And lastly, building a digital and tech platform to ensure that we keep the low cost of distribution very low. So I will take you through these 4 or 5 areas, and then we can take questions. Bharat continues to be a big growth opportunity for the country. The private banks are growing at a much faster clip than the PSU banks, and that presents a big opportunity for banks like us to grow in these markets. As you can see on the slide, the private sector banks are indeed growing at a much higher clip and gaining market share, and that's an opportunity for Axis Bank to grow faster in these markets. The PSU shares is in deposits and in assets is gradually shrinking, and we are making more and more inroads into this sector. There are favorable external tailwinds. A lot of good work is happening. A lot of investments are going into the rural and semi-urban markets. There are rise of new distribution models like CSC. Government of India is building a huge agri stack, which will enable private banks like us to underwrite the customers at an individual customer and farm level. There's diversification of income. There's increasing internet penetration. All these are favorable tailwinds, and we believe that Axis Bank we are well positioned to build and win in these markets on the back of already existing deep distribution and continue to expand it. It's a high ROC business for the bank. We make good returns in this business. I'll take you through it. Bharat volumes are PSL accretive. Amitabh mentioned about the PSL, self-sufficiency of the bank, and Bharat banking initiatives have helped us attain that self-sufficiency. And a comprehensive product suite and proven lending experience is something that helps us, do well on the credit costs in the market. And I'll show you the numbers that we've achieved over the last couple of years. Just to recap, Bharat banking is actually both a vertical and a horizontal within the bank. So as vertical, we run some businesses end-to-end through all the branches in the country. And as horizontal, we work with the rest of the bank and provide them the depth of product and distribution and process for the rest of the bank in these markets. For instance, we help corporate bank clients to deepen penetration of credit in their supply chains. We help credit card business sell credit cards in Bharat banking markets. We help retail assets, build home loans and affordable housing business or auto loans in this market through the distribution platform that we have built. And also building partnership with agri-tech partnerships and fintech partnership that we have. We have about 75 plus partnership. Amitabh alluded to it, and I'll take you through it in detail. We said that these are the 5 imperatives for us and 5 things that we'll do. We want to become a growth engine for the bank because there is an opportunity. It is highly profitable business for the bank. It has to help the bank improve its risk-adjusted NIM, making the bank self-sufficient in PSL, building a low-cost distribution model, and also moving from a product-led to a customer-led model. And I'll take you through each one. If you look at our journey in the last 3 years, in the last 3-4 years, our growth in the asset side of this businesses in the last 2 years is 4x of what we did, or 2x of what we did in the previous 4 years. So we've been able to, demonstrate that with focus, with building the right product set, etc., we can grow, and that gives us confidence that as we go into future, we'll be able to continue to build on this platform to grow even higher. If you look at our disbursal shares of retail assets in Bharat banking branches, we moved to about 10 percentage points. Our deposit share has also grown, and we need to do more. And Amitabh talked about it in his talk that we need to do more on deposits, and that's work in progress for us. The growth is coming across all product categories. Our microfinance business has grown by 36%. Enterprise business is growing at 57%. Gold loans is growing at 32%. Our disbursals from our partners like CSC have grown 3x in the last couple of years, and we in the next 1 year or so, this number will be about 5 to 6x of what we were doing in FY23. We have indeed delivered a higher NIM. If we baseline the numbers to H1 FY22, our NIM, net interest income has moved up by 63%, our operating income has moved up by 68%, our net credit cost actually has come down by 53% from what it was. All the assets are PSL accretive, 90% plus of the business that we do in Bharat Banking is PSL accretive, and large part of the small and marginal farmer PSL number is coming from Bharat Bank, and these are high ROC driven businesses, which gives us an opportunity to grow these businesses more and also expand the profitability at the bank level. We're also doing some work in boosting the trade and fee income in this customer set, which we're hitherto not doing, and that's also helping us get more flows from at least from our enterprise customers, both on trade and on forex volumes. The bank has seen 58% increase in penetration rates in Q2 FY24 versus FY21 on the PSL penetration. Agri PSL penetration has gone up by 88%, or SMF PSL penetration has gone up by 83% in the last 2-3 years or so. When you look at our low-cost distribution model, our OPEX to income numbers, despite investing in the businesses, has actually come down. Our operating profit has gone up by 73%. Our distribution strength has gone up by up to 224%, and we're seeing substantial increase in our volumes that we're getting from all of these distribution channels, and also these are low-cost, distribution channels. So as they scale up after the period of investment, we expect the unit economics to further improve. One of the things which is very important in Bharat Banking is to ensure that we don't have a product view of the business, we have a customer view of the business, in which case, when you're sitting with the customer, you're actually able to do more with the same customer through the same seller or through the same branch. So that's very important for us, and that is also helping, leading us to build a multi-product digital platform. When we look at number of branches selling more products, that number is seeing an increase, and we're expanding that across the length and breadth of the banking, of our bank's architecture, including the rural unbanked branches, the semi-urban branches, and the rural branches. We scaled cross-sell initiatives. So one of the things that the horizontal is ending up doing is actually participating or getting every business to participate in the opportunities that we have within Bharat. So getting more businesses across the bank to sell Bharat Banking products. Gold loan cross-sell, for instance, we've seen cross-sell share move up. We have liability NOA, number of accounts from asset teams has gone up by 6 times. Our insurance premium has gone up by 3 times, and that's on the back of the multi-product strategy that we are building. There are 6 key pillars, and each one of them is at various stages of development. So there's multi-product partnership network. There is Bharat ecosystem. We are working on creating 3 or 4 key ecosystems. Building customer-centric propositions, best-in-class platform, digital platform, the digital transformation, and deepening the depth of distribution and customer relationships. So on the first side, we are looking at the entire partnership ecosystem in 4 key pillars. One is looking at large distribution network like CSC and a couple of other partners like Pay Nearby and Spice Money, working with large rural corporates, who are corporates within our bank's ecosystem, working with new age technology companies, and working with NBFC or MFIs who have rural play to do co-lending with them. So we're seeing in CSC kind of partnership, we're seeing 3x growth in disbursals. We're sourcing about 30,000-40,000 liability accounts monthly. We are seeing gold loan disbursals increase by doubling almost every 6 months in all of these partnerships. And now in all, we have about 75 plus partnerships in the Bharat Banking ecosystem. On the ecosystem side, our approach is that we go to large, corporate-led ecosystems, which are either input-driven or output-driven agri ecosystems, and operate with them in such a manner that every participant in that ecosystem does not have to go outside the ecosystem for any of their needs. In one such large corporate where we're working, we are able to customize our products for lending to FPOs, for lending to farmers, for lending to the logistics providers, to that ecosystem, lending to retailers, lending to manufacturers in the supply chain, and also opening their accounts in the process, and also giving them trade and cash management solutions. So that's something that is helping us scale one such ecosystem up, which is the large agri output system. Similarly, input ecosystem, we're working with multiple partners to scale that up, and a large trader ecosystem which has about 12 lakh plus and 95% of the rural pin codes are covered. And when we look at opportunity within each one of these ecosystems, it adds to about 30 to 40,000 crores of lending opportunity just in these three ecosystems, which are profitable. And one of the things it helps us do is that, since there is an agreement or there's a transaction underlying with a large corporate, the credit quality is far superior for these customers, and because you get referrals from the partners ecosystem, and you're able to capture flows across the entire supply chain. We're also working on creating customer-centric propositions. We launched a new liabilities account, and we've seen good flows there. It's called Sampan Savings Account, wherein we have replaced the benefits of an urban customer with the benefits for a rural or a semi-urban customers. For instance, when you keep balances, you're getting discounts on buying agri inputs, buying fertilizers, buying agri equipment or farm equipment, etc., or getting health insurance, getting soil testing free, etc. Those are the benefits that are being targeted at the rural affluent farming customer, and that is helping us capture some flows. We're also doing a lot of work on agri infra financing, on FPO financing. We're the first bank in the country to do a metal pledge financing for retail customers. We have a completely end-to-end digital co-lending platform. I'll talk about that in a bit. We are working on deepening relationship in the existing segments across our products. So we're taking all the products which the rest of the bank has to this set of customers, and we're customizing our approach. I've just given an example of how we are looking at customer interactions in a branch, and how we are looking at redesigning of branches in these markets to enable more interaction with farmers and community collectives in each one of these markets. We are perhaps the first large bank to have an end-to-end digital co-lending platform. We have about 12 plus partners on that co-lending platform. It's a partnership we have with a fintech, and this is across multiple asset products, largely around secured assets, auto, affordable housing, MSME, secured MSME loans, and secured loan against property. This helps us enlarge. All of them are PSL accretive assets, and this helps us increase our reach and also get us more PSL accretive assets. And these are all positive RAROC generating businesses for the bank. And we are thinking of scaling this platform to about 20-25 partners in the next 1 year. But we are very selective in who we pick in terms of quality of quality of sourcing, quality of customers from the partner. And also another thing, is to use our entire eKYC platform within our partners ecosystem to get more liability accounts. We source about 50,000 accounts monthly through this network, and which is likely to be scaled up. Our digital transformation has three principles. One, it has to be omni-channel. It has to be multi-product journeys across the same in the same platform, and it's a vernacular. All our products are actually at various stages of development for digital development, and in the next 12 to 18 months' time, we would have put all these products on digital platform, and many of these products will have co-originating journeys for multiple products. For instance, doing a card with a mortgage product, or doing a savings account for an individual customer. These are all co-terminus journeys that we are trying to build, so that as the customer gets onboarded, every asset customer actually ends up also opening a savings or a liability account with the bank. And that's at the core of the entire transformation. I talked about deepening distribution and customer relationship. The two or three initiatives that I've talked about here. One of the things is that we're trying to drive is to follow the money with our large customers and see, how do we participate in a customer ecosystem and get more accounts out of the customer ecosystem. So as a manufacturer, when you're making payments to other to partners or vendors, etc., extending our reach to those partners, and we've about 2.2 million such beneficiaries of SME customers. We've seen huge success in this. We're also approaching the mandis very differently. We will be present in about 50 mandis this year, and wherever we are going and deepening mandi relationships through a mandi mitra manager. some kind of a coverage manager who's in the mandi and trying to capture flows across asset and liabilities. We're seeing huge success, and we've increased our market share in wherever we have piloted this, and this is going to scale up to about 300 mandis next year. And then lastly, the asset liability model. Every single asset customer of the bank has to have a liability account with the bank, and it is being enabled with co-origination journeys. And we are looking at ensuring that most of our asset businesses continue to improve their self-funding ratio from their liabilities that come from the same set of customers. And we are seeing, in the next 12 to 18 months' time, we are seeing that that all the businesses get digitally transformed. We build omni-channel experience for our customers, multi-product journeys in the single journey, and all products which are customized for the rural and semi-urban markets. 100% branch coverage, product agnostic, delivery for our clients across all our delivery centers. Agent network with mini bank with risk guardrails. We're trying to create a bank within a bank with our agent network that we have through CSC, and a branch on wheels. And these are some of the initiatives that we are trying to drive, and these are all the areas that we will make an impact on. To conclude, we think that Bharat banking will continue to be one of the key pillars of growth for Axis Bank. We want to grow the balance sheet at roughly about 2x the industry average. We want to continue to support the bank's growth by being self-sufficient in PSL compliance across segments, and being self-sufficient even in the small and marginal farmer segment profitably. Building an end-to-end omni-channel digital delivery model which will lower our costs even further. Scaling up multiple ecosystems in the rural and semi-urban markets, and expand the bank level returns by generating high ROC for the bank. So this is what Bharat banking is focusing on. Any questions? Yes.
Thanks, Manish. The point on asset-led branch opening or asset-led strategy of getting into the Bharat market is clearer. What I want to understand is what are the challenges in mobilizing liability in these areas? Because we know the inherent potentials in the rural semi-urban is meaningfully lower in the larger markets. So what are on-the-ground challenges that you face? That's number one. And number two, is it fair to say that because you're following asset-led branch expansion strategies in this market, the break-even is relatively faster?
Yeah, so when you look at an overall picture on the deposit side, between current accounts, saving account, and term deposits, we are seeing a definitely higher growth in our term deposit business. Current account is not that large in these markets because a trading segment, small traders, etc. So what's important is that as you open the accounts, depending on the kind of products that you are having, there is within the same ecosystem. If you are participating in the same ecosystem, one side asset becomes other side liability, right? So the flows you need to capture very sharply, and also we need to get after the rural affluent customers with a bit more focus is something that we are trying to focus on. The challenges are it's widely distributed. It's a very widely distributed market. How do you service your clients without having branches in remote places is a key challenge. And the second thing is that how do you embed more and more customers into the branches by selling them some other products of the bank as well, which could be a risk cover for insurance, which could be a small ticket mutual fund, etc. And that's something that we are focusing on. But having an asset-light liability model, we see that if a customer opens an account with you and you're not able to service that customer by giving him an asset product, the tendency to move away from the bank is very high. So if you do not focus on asset lending and you do not make it the delivery simple for that customer, and which is customized, underwritten, because it is a non-standard asset. In many cases, the types of properties that you have to really figure out whether to underwrite that property or not, and how to underwrite that property. Developing that understanding within the business, within the bank, etc., becomes very, very important. And that's where we also rely on some of our understanding that we're getting from our co-lending businesses, because those assets are coming to us, and that helps us understand that space a bit better. But asset becomes extremely important for us to to build a liability franchise in the business. Yeah. And then I talked about the trading network. The trader network is also very important because large number of flows, a large amount of flows happen through the trading network, and customers come to the partners, they keep money there. Some people are transferring money to their home, etc. So that network also becomes very important, but we have to do it very carefully within the risk guardrails of the bank. Yeah.
If you could just talk about the break even on these branches, even if you can't quantify in terms of number of years, qualitatively, how different is it vis-a-vis, say, your urban markets?
Uh, I wouldn't be able to give you a specific answer, but I tell you the variables that are at play. You know, the cost of running a branch in a smaller city is obviously a bit lower than cost of running a branch in an urban center. Rentals are lower, costs are lower, etc. So and given the fact that your products are higher yielding and higher returns than some of the products that end up being sold in the metro markets, etc., your break even ideally, if you're able to do it well, should ideally be faster in this business. And for a gold loan business, for instance, if you're able to penetrate deeply and within the risk guardrails of the bank, it doesn't take capital and gives you a good NIM. That is a starting point for any branch. So and all our new branches that we're opening this year, about 650 of them, all of them are pre-equipped with selling a gold loan as a first step to get entry into the market. So that's something that we are focusing on. Similarly, microfinance business, in an environment today, the risk is well contained, or microfinance delinquency numbers are amongst the best in the industry. So we're trying to expand that business, and that's also a high risk, high return generating business. So the break even should ideally be faster.
Thanks.
So you mentioned a comment there that was interesting that in the RUSU markets, CASA is small in these markets. So
Ka.
CA is small.
Ka
Okay.
is
So
ticket size is small, yeah. So
small. How would you categorize SA relative to so SA and TD is so essentially in this business, the liability side looks like SA and TD.
see,
And
by
the
its
asset side is high yielding loans.
yeah, yeah.
So the car opportunity is smaller in that area.
No, so the ticket sizes are smaller. Even for SA, the ticket size is smaller because the income levels are lower than the urban city centers or metro city centers in the country. So, you obviously, when you are then getting these deposits, it becomes very important for you, one, to get those customers at low cost, two, to retain them for a longer period of time so the balances stay there, and that you can do by selling them more asset products. Given the nature of the product that you sell, which are higher yielding, higher return generating products, you end up attaining a faster break even. I also said that it's very important to also, there's a large part of this market which is also affluent market, which is because India is deepening, investments are going. Several initiatives of Government of India to create clusters and inviting investments to these sectors is becoming bigger and bigger. Small example I'll give you. Let's say fisheries in Telangana is a big business. I mean, and as you keep going deeper, you see the wealthier customers, farmers, etc. If you do not get them to bank with you end to end, you're missing an opportunity. So, and that's why products like Sampan then come into being. So
is it fair to say, as you look at the broader RUSU opportunity set, that the CASA ratio in that business will be lower than in an urban metro kind of framework?
CASA ratio in these markets is actually much higher at this point in time. Yeah.
That's what the
At this point in time.
Thank
So when I said smaller, ticket sizes are very smaller because you don't have corporates and MSMEs, very small customers. The CASA ratio actually is higher in these markets and possibly stickier deposits. Yes.
Go ahead, Mahesh. Hey, hi. Just one question. Could you just tell us what are the main products that you sell here in terms of broad metrics? You spoke about MFI, you spoke about gold loans. Could you just kind of broadly classify what are these, how big are these?
How big? Okay. So, books.
Qualitatively.
Yeah. So we have about 80,000 crores of asset in the verticals that we run in the verticals in the business, which are farmer finance, farm equipment, tractor finance, farm equipment finance, gold loans, retail microfinance, MSME, enterprise loans, warehouse receipt finance loans, some micro enterprise loans, lending to microfinance institutions, which is PSL accretive, co-lending book. So these are about 80,000 odd crores. Within this, large business are farmer finance, which is obviously very important for the bank. Gold loans is a big business. It's growing at 35% year on year. Microfinance is also growing. It's now becoming a bit more sizable. It was small book for us in the last couple of years. We've grown, and we want to focus on it even more. So about 80,000 crores in these assets. And when you look at retail assets on the other side, that number, selling home loans and personal loans and auto loans, etc. in these markets is the horizontal that we work with retail assets team, and that's the other part that we sell through branches.
Okay, just one additional question. There is some level of disconnect between the deposit growth that one sees in these markets. It seems to be marked slower than what the expectations are, whereas almost all the banks, including you, seem to be quite aggressive in that space from a growth perspective. Also, when you kind of look back at some of the other sectors, they too seem to be pointing to some level of slowdown. Why is the lending part of the book so successful for the banking sector at this point of time?
See, this market is a credit. I wouldn't say hungry, but credit-focused market. People need money, capital for growing their businesses, for their activities, etc. And as the income levels go up, deposits will also go up over a period of time. What we are seeing is that we're seeing a higher growth in deposits in these markets as of now, possibly because it's a small base and we're coming from behind. But as it starts with asset and as income generation goes up for that set of customers, liabilities then follow. So that's that's my response to your question.
Okay. And just one clarification here. These are all what, NTCs, or they have some level of?
No, these are not NTCs. So
in the sense, how much would the incremental growth be contribution from the NTCs?
For NTCs will be about a small number. I wouldn't say a number, but large part of these are credit touched customers already.
Okay, thanks.
And then Rahul, last two. Yeah, first Pragat.
Hi, here, this one.
Yeah, hi.
A slightly macro type of question. Just wanted to get a sense that, number one, there we keep hearing, the rural economy is struggling for multiple reasons. What are you seeing on the ground? And ahead of, elections, both at state and central level, how do you manage your PSL targets, growth aspirations, and underwriting? Because this is a non-linear period from that perspective. Thanks.
See, for this economy, obviously this is a bit more dependent upon some external factors like weather and climate, etc., etc. So that kind of plays an important part in how this works. And also and given the fact that elections are going to come, there could be some waivers or something that if it goes by, but if it comes across. But if you heard RBI governor yesterday in his speech, I mean, he's actually very bullish on this economy, and and we're seeing right now, so far we've not seen a challenge this year, despite a slightly volatile monsoon. We're seeing some pockets in the country where the monsoon is not very well penetrated, etc., where we could see some challenges, but portfolio as of now is holding up. Elections is anybody's guess. We're just watching it, and managing our portfolios. We can't control it, but we're trying to ensure that we give adequate coverage to our portfolios through proactive collections and proactive, engagement with the clients, so that the portfolio remains within control. As of now, this crop season is just started, but the last crop season and the April-May cycle numbers were quite okay. We're just watching it very closely for the next cycle. This crop will tell us as to where we eventually land, but so far looking okay.
We'll go to Rahul. Will come. Rahul.
Yeah, thanks, Abhijit. Manish, hi, this side. Thanks for the detailed presentation. Two questions. One is, what's our competitive strength in some of these pockets that we are looking to expand? Because NBFCs are historically well entrenched in some of these pockets, and some of those have done well. Second is slightly outlook-related question. So we've put a lot of these, taken a lot of these initiatives which you outlined in some of your slides. But still, some of the targets are below the regulatory thresholds like SMF, etc. So if you were to think about the next 3 years, where could the scale be? What kind of profitability we are talking about, particularly on the digital side? Can there be a meaningful uplift on the profitability out there?
Yes.
Thank you.
So I'll take you back to the to what I said in my presentation. You see, it becomes very important in this market that when you underwrite a customer, and who do you go and work with, and then and the competitive advantage comes from from us, from Axis Bank being who we are. Our ability to provide length and breadth of distribution to anybody we work with across the country is something that cannot be possibly matched by many smaller NBFCs who can go into some small areas and work, but they cannot give you the depth that a large corporate that would look like, because you have to build this business and attain some economies of scale for it to become profitable. So that I think is one. And how do you then embed yourself digitally into that platform, and don't restrict yourself only to providing a one-time credit solution to the customer, but bring multiple engagement opportunities with the client, and which are to their benefit. For instance, when we work with when we launched the Sampann account, we've not only done what we've done in the product, but we're also getting offers for our clients month on month, so which will help them get better offers along with finance, etc., for the areas that they need or equipment that they need for their running their business. So I think that's very important. And at scale, when you work, you can make it more effective. Collections is a key thing. So and our collections capability and building that collections architecture backbone across the country gives you that depth too, which may become difficult for NBFC. So, and we also work with some of these partners to where we do not have the current depth of customer onboarding, etc. We sift through their customer base and get the ones that work for us. So going forward, I won't be able to make a forward-looking thumb statement, but I think as this share increases in the overall book of the bank, it should become more and more accretive. There could be some volatility because of weather and climate, because incomes depend upon that. But on the PSL side, the small and marginal farmer, we're seeing an increase, a lift in our trajectory. For sure, small and marginal farming is not easy to do, because you have to be very careful when you lend to that customer segment. We've seen our numbers go up. We think that over the next 3 to 4 years' time, we should come close to what the regulatory thresholds are. But on an overall basis, on an overall PSL numbers, we should continue to be in the same zone. But we are not doing anything just to get a PSL asset on the book. We are getting only those PSL assets on the book which are accretive or profitability positive for the institution.
Yes, someone from the back with the last question, please. Yeah. Can you introduce yourself?
Hi, this is Ketav here from Anrati. Just two questions. Number one, what sort of origination comes now through the co-lending model in terms of percentage, if you have that number offhand? Is it substantial?
Co-lending as a business or as a model, we started this year in April. We launched this year in April. We do, it's roughly about, to tell you, roughly about 2 to 3% is right now coming through co-lending models, and that is expanding month on month. But we want to be very careful there that that as you in terms of selection of partners. And mind you, we don't do unsecured so far. Large part of the co-lending market actually is doing unsecured. So we do not have co-lending on our platform just now. We are perhaps the first ones to have built, across our product categories, a secured, journeys, a secured asset journey, which is a bit more complex than an unsecured loan getting transferred to the bank, right? So that's something that we are doing, and we are doing it in a calibrated manner, because we are obviously dealing with a set of NBFCs who are new to us, and we're understanding their business model, etc. But there also we are making an attempt that we capture higher flows from the same set of customers, and not only just the loans that we get from the NBFC. So it's about 2-3% short answer, and it may go up slightly in the next, as the overall pie grows, this may also increase in the next few quarters.
Sure, thank you. And the second question is related to the microfinance segment. The growth rates seem to be very robust. Structurally, in your view, has something changed over the last couple of years that has led to this high growth?
In general, there's a benign, environment. Just now for microfinance, our numbers of delinquency, etc., are big. I think structurally there are changes that have brought enormous amount of focus on the consumer, on the borrower, to ensure that those vulnerabilities are not exploited, which can blow up the business. So last year's RBI regulations on doing FOIR based lending, and some of the other stuff on disclosure, etc., for the customer have brought in a lot of discipline to the entire lending process. So that's something that is good. We're also seeing that the graduation of customers from being just a microfinance borrower to the next level and to the next level of income levels, where you could go in and do more with those set of customers. Those opportunities exist. For instance, you could do a secured LAP, you could do a used two-wheeler loan, you could do a gold loan, you could do a small enterprise loan, etc., to the same set of customers. And those are the current opportunities that we are currently exploring, seeing if you could, as a customer, graduate to next and next income levels, can you do more with the same set of clients, because they have proven track record with you. So
Thank you.
yeah.